Welcome back. Today, we're going to decode a really crucial concept for every single taxpayer. What exactly counts as salary under the new Income Tax Act 2025? It's a word we all think we know, but its legal definition is actually much broader than you might expect.
So, here's our game plan. We're going to start with the big question. Then we'll unpack the legal side of things, see how it all plays out in a real-world scenario, and wrap it all up with the key things you need to remember. Okay, let's dive in.
All right, let's kick things off with a question that really is the cornerstone of accurate tax advisory, and it affects every salaried individual out there.
This is such a critical question, right? Getting the answer wrong can lead to some serious compliance issues down the line. And the answer isn't just a matter of opinion. It's very clearly laid out in the new Income Tax Act 2025.
To get to that answer, we actually need to look at two key sections of the Act. Section 15, which basically sets up the tax on salary, and Section 16, which tells us what salary is. Let's see how these two work together.
The easiest way to think about it is like this. Section 15 is the why. It's the provision that says, yes, salary income is chargeable to tax. But Section 16, well, that's the what. It tells us exactly what the law counts as salary when it's time to do the calculations.
Now, the most important word on this slide, and I can't stress this enough, is includes. In legal language, that word is a huge signal. It tells us that the definition of salary isn't a closed, fixed list. It's designed to be expansive, to cover a whole range of payments from an employer. So what exactly falls into this wide net? Well, Section 16 of the Act gives us 9 specific items. Let's break them down one by one. First up, we've got the basics, the ones you'd expect. Clause A covers your basic wages. Then, clauses B and C bring in post-employment benefits, like any annuity, pension, or gratuity payments you might receive. Next, the definition gets broader, covering variable and even non-monetary payments. This means any performance-based fees and commissions, any non-cash benefits. We call these perquisites. Think a company car or housing. And, very importantly, any profits paid on top of your regular salary.
And finally, the Act includes 3 more really specific items. Any salary paid in advance, which gets taxed in the year you receive it, not when you earn it, any payments for leave you didn't take, and the taxable part of the annual growth in your recognized Provident Fund.
Okay, so theory is one thing, but let's see how this all works in the real world. We'll take a look at a fictional employee to see how these different salary components actually come together.
Okay, look here. The basic pay is 8 lakh rupees, but under Section 16, we can't stop there. We have to add the 50,000 rupee commission, the 30,000 rupee taxable value of the company car, and another 20,000 for encashed leave. This just goes to show you how the total taxable amount can be a lot higher than what you might think of as your pay.
So here's the bottom line. While the basic pay was 8 lakhs, the actual taxable salary, according to Section 16, is 9 lakhs. That 1 lakh rupee difference is made up entirely of these other components defined in the Act. And, overlooking them would be a pretty big mistake when you're calculating taxes.
Knowing all the components is really just the first step. So now, let's talk about the practical side of things. How do you stay compliant and avoid some of the most common mistakes?
Look, for employees and professionals alike, having a checklist is a lifesaver. First, always cross-check your Form 16 against your monthly payslips. Second, make sure every single perquisite is disclosed. Third, don't forget that rule about advanced salary. And last, keep detailed records for all your reimbursements. Following these steps is going to ensure your tax filings are spot on.
A really frequent and often costly mistake is just forgetting about those non-monetary benefits, the perquisites under Section 16. It's pretty easy to forget about something you don't receive as cold, hard cash. The correct professional approach is to value these perks according to the rules and declare them as part of your total salary income. It's non-negotiable.
Phew, we've covered the law, the components, and a practical example. So let's just quickly bring it all together and recap the most important points from this explainer.
Try to keep these 5 points in your mind. 1. Salary is an inclusive term. 2. It's defined by those 9 components in Section 16. 3. This includes both money and non-money items. 4. Accurate calculation is absolutely crucial. And 5. Being diligent about compliance is your best bet for avoiding any future issues.
See, understanding your gross taxable income is step 1. But that's not the end of the story. The next big step is figuring out how you can legally reduce your tax liability through all the various deductions and exemptions available.
Hey, if you found this explainer useful, please do hit that like button and subscribe.
It really helps us create more content for tax professionals just like you.
And as always, please take a moment to read the important disclaimer on your screen.